Welcome everyone to Vested Interest. It is February 21st. Today we're going to take a look at Kroger. This is out of the consumer staples sector, maybe one of the stores that you shop at to get your groceries. I know it is one that I shop at. Let's jump right in the video. And before we jump into the video, if you could take the time to hit that thumbs up button down below if you find any value in the content, hit the subscribe button, join us on this journey to financial freedom, join the Vested Interest community, and ring that notification bell so you're notified whenever we put out any new content. Doing that really does help out a small YouTube channel like me grow. So thank you to everyone that has done that, and thank you to those of you who've taken the time to do that just now. Appreciate it. Now, this is the Vested Interest Stock Screener. This is how I set up the videos. It's also how I look at a company on a high level and see if I am interested in investing in it. Just because it meets a 5 of 8 or 6 of 9 if it's a financial company, that's what this highlighted green is below, does not mean that I am investing. It just means that it goes on my watch list. And then I do more of a deep dive into the financials and do a discounted cash flow analysis to see what I'm willing to pay. So you can pause this and go through it. Now, don't just blindly copy my screener. Make sure that you are setting your own investing criteria. This just gives you an idea of what I am looking at. And again, it's how I set up these videos. So it's how we're going to walk through this video today. Back to Kroger, www.kroger.com. That is their homepage where I pull this information from, and that's where you should start with any company. Go ahead and make sure you understand what they are doing, how they make their money, what products they sell. Again, www.kroger.com. That is their homepage. The history of Kroger. Our story began in 1883 when Barney Kroger invested his life savings of $372 to open a single grocery store at 66 Pearl Street in downtown Cincinnati. He had a simple motto: be particular, never sell anything you would not want yourself. Nearly 140 years later, right? So over 100 years, the Kroger company is still particular about how we serve customers and community, how we innovate, and who we hire. As the nation's largest grocer with nearly 2,800 stores in 35 states operating under 28 different names, and you can read the rest there, but I wanted to highlight that. It's not just the Kroger brand, it's all the brands under their umbrella, right? Baker's, City Market, Dillon's, Food for Less, Food Co., Fred Meyer. So you may not even realize if you shop at one of these other stores, Fry's, Gerb's, Home Chef, King Soopers, obviously Kroger, Mariano's, all these different markets are under the Kroger brand. So again, you may not even realize that you are shopping at a Kroger store, but because it's not named Kroger, it is Ralph's. I know Ralph's are a lot of places as well, Smith's. Just because it doesn't say Kroger doesn't necessarily mean it's not a Kroger store. Let's keep going here. The reason we're taking a look at them, down 0.4% on the day. Not a big drop, but a drop nonetheless. We are talking about the Kroger company, ticker KR, out of the consumer staples sector. Closed the day out at $47.81. 52-week range as low as $42.10, as high as $50.36. They are a tick closer to their 52-week high than their 52-week low. Average volume, 4.8 million. Today's was 2.9. A beta of 0.45, so they are less volatile than the overall market. Market cap of $34.396 billion. Price to earnings ratio, PE at 18.6, $18.60. Earnings per share, EPS sitting at $2.57 per share. Earnings date going to come in sometime between February 29th to March 4th, so right at the end of this month or the first part of next. Forward dividend yield is $1.16. They are a quarterly payer, so divide by 4, or we'll see that here in a little bit. We're going to cover that also. Dividend yield starting at 2.42%, where it currently sits if you were to buy them now. And the ex-dividend date was February 14th, and they will pay out on the 1st of March. 1-year target estimate, at least according to Yahoo Finance, where I pulled this information from, $49.84. So they see it going up slightly from where it currently sits. Not a whole lot of room for appreciation in the stock price on this one. Looks like they're down a little bit more in the after hours. Now we're going to get into the statistics, look at dividend yield theory. To do that, you go over here on the left, you click the statistics, you go down to dividends and splits. You look at their 5-year dividend yield average, 2.05%, compare it to its current 2.42%. I know that says forward annual dividend yield, 2.42. It's the same number, 2.42. So that's the current yield. And since it is higher, that speaks to undervaluation on this one. If this number was lower than the 5-year dividend yield average, that would speak to overvaluation. So according to dividend yield theory, currently this one is undervalued with a slight margin of safety on this one. Payout ratio is low. I like 75% or less. This is sitting at 41.63%. So lots of room to increase that dividend over time with a nice, again, 2.42% starting dividend yield. Now we're going to get into the statistics, look at some numbers here, basically their free cash flow and their repurchase of capital stocks. But there's a lot of other good information in their balance sheet, their income statement, debt to equity ratios. You should be looking at their margins. Are they growing over time? Is their revenue growing over time? Lots of good information under their balance sheet and income statements. For our purposes, we're going to look at free cash flow. We want growing free cash flow over time because typically if a company has growing free cash flow, they have growing dividends. Going back to 2021, $3.9 billion in free cash flow. 2022, $3.57 billion, bit of a drop there. 2023, more of a drop down to 1.42. And so far, 2024 numbers, is that 2024 numbers here. 123, 2024 numbers at 2.3 million. So it looks like a bit of a drop in 2022, but let's look at this next number here. Repurchase of capital stock. Repurchased 1.3 million shares in 2021, 1.6 in 2022. So that can account for the drop in free cash flow, can be accounted for in the increase in repurchase of their shares. Now, 2023, that is not the case. They only repurchased 993,000 shares compared to the 1.6 million the year before. So a decrease in repurchasing their shares as well as a decrease in free cash flow. So that's not good to see. It looks like they may be rebounding in 2024 so far. We'll have to wait and see how those numbers shake out. But overall, I would say free cash flow is actually decreasing. So that would be something to watch. Now, they do make acquisitions from time to time. There is a big acquisition on the table right now. So they may be setting aside some of that free cash flow for this acquisition. You'd have to do more research on that one. I do like that they're repurchasing their own shares. Nice to see, though, that has decreased over the last couple of years. So I'd like them to continue to do repurchasing their own shares, and I'd like to see a rebound in this free cash flow. Now, stockanalysis.com is another site that I use. Make sure that you are picking more than one site. Pick any sites that you like. Just make sure it's more than one so you are making sure the information you are getting is accurate and up to date. Now, they have 9 stock analysts that have taken a look at this. They call it a consensus buy, though it is right on the hold. And I am long Kroger. Right now, I'm holding on this one. You'll see my cost basis here a little bit. It's up quite a bit on my cost basis, so I would love for it to pull back. I'm not adding right now, but if there was a significant pullback, I would look to add to this position. I do like Kroger. Again, it's where I get my groceries. As well as Costco. We shop at Costco too. But they have a low estimate of $46. It currently sits above that, so if it was to drop down to their low, that would be a 3.79% decrease from where it currently sits. Average estimate of $52.33. It would be a 9.45% increase from where it currently sits. And they have a high estimate of $60. That would be a 25.5% increase in the stock price. All the while, you could collect that 2.4% dividend yield, at least if you were to buy them now. Now, I like to get into statistics here, look at return on equity and return on invested capital, see how efficiently a company is investing back into itself. And I like 10% or better on these metrics. Return on equity sitting at 17.6%, beats the 10% I'm looking for there. Return on invested capital a little low at 6.55%, but grocery stores like this typically have a low return on capital. They are a bit capital intensive, right? They are constantly doing remodels, especially if they own their own stores or they have significant amount of money going out to pay out their leases if they're leasing space or renting space. Now, EPS growth, I also like 5% or better on this metric. This is sitting at 11.14 estimates over the next 5 years, so that more than double what I'm looking for there, with revenue forecasted at 2.39%. Not that I really look at revenue. I want growing revenue over time, but it's not a metric that I particularly focus on. But good to see growing revenue forecasted over the next 5 years as well. Now, as I said, I am long Kroger. I do have 100 shares. Currently, I am up 6.52%. My cost basis is $44.88, so I would want it to pull back below my cost basis here before I would be willing to add to it. I am up slightly, again, $292.59, 6.52%. Dividend's going to pay out here shortly, so I'm looking forward to that. Now, we're going to look at the dividend payout. Again, low payout ratio, under 75% I'm looking for, 45.14%, lots of room to increase, and this I really like. Dividend growth of 14.14%, very high dividend growth with a lot of room to continue to increase this, and I hope that they do continue to increase it. Going back to 2021, they were paying 18 cents. They raised it up August 2021 to 21 cents. Raised it up again August 2022 to 26 cents. Raised it up again August 2023 to 29 cents. And I would expect in 2024, if they're going to maintain this raise, this dividend raises, they are going to do that in August of this year as well. So tune back in for that. This is one I really like. I would like more of a pullback again. I would be interested in it under $44.88. Or even lower would be great, but I am not looking to add to this right now. I think it's a little on the high side, but it is a good company. I really like this one, and I am watching it to see how far they fall. Again, looks like it's down a little bit more in the after hours. Might be one to throw on the watch list if it's not already in your portfolio. Well, that is it for this one. Let me know what you think of Kroger. Is it in your portfolio? Do you shop at their stores? I updated the picture here. This is the most recent picture from the backyard. Again, all the snow's gone, starting to make it look nice out back, even though it is still pretty cold here. Nice day today overall, but it's still winter. Well, as always, appreciate you stopping by. If you haven't done so already, don't forget to show me some love. Hit that thumbs up. Ring the notification bell. Most importantly, hit that subscribe button down below. Join us on this journey to financial freedom. Join the vested interest community, building a community of like-minded dividend growth investors so we can share our experiences. We cannot benefit from each other's investing, but we can certainly benefit from each other's experiences, good and bad. I show you the good, I show you the bad. I do personally read and respond to the comments. I'm always interested to read your questions, opinions, or suggestions for future topics. So if you have a company like Kroger you'd like me to work into the Stock Pick of the Day series, go ahead and drop in the comment section down below, and I'll work it in the rotation. And this is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes to those who take a vested interest. Hey, thanks for stopping by. Hope you have a great weekend. We'll see you in the next one. I'm not a financial advisor. Nothing in this presentation should be considered financial advice. I'm only sharing my opinion, investing journey for guide, chase, no, and entertainment purposes. Investing involves risk and abundance. Never invest any amount not comfortable losing. Always do your own research about specific situations, circumstances, and select criteria, or seek the advice counsel certified financial advisor.